All right, welcome back to Market Day Report. Let's get right in to see what these corn prices are doing. Let's see corn. Bring up that corn table. It's off 2 1/4 cents. That's December. 682 is last. March is down 2 3/4 cents to 687 3/4. How about soybeans? Let's move along and see what they're doing. They're down 14 cents in the front month no, 1381 and a half. Jan's down 14 and a half cents to 1390. Moving over to the Chicago wheat market. Chicago wheat is down 10 1/4 cents to 840 and a half. March is down 10 1/4 cents as well to 859 1/4. Kansas City hard red wheat, that's down 10 3/4 cents to 937 and a half, while March is down 10 1/4 cents to 936 1/4. Spring wheat, Minneapolis, 7 3/4 cent loss there in the D's to 953 3/4. March is down 8 1/4 to 959 3/4. Cotton, that's down 274 points to 76.39. Let's bring in our next guest analyst, Todd Horowitz from Bubba Trading. Todd, thanks for joining the show. He's coming to us from Chicago. What are your thoughts?
Well, Scott, I mean, I don't understand why we're lower. I think there's a lot of things that are going on that make no real sense from a supply-demand side, from where the market should be based on cost. And we're seeing, we got an election 2 weeks from tomorrow, and I'm not saying anything's happening, but to me, it looks like something's happening. Like there's some powers that be trying to keep food prices lower along with oil prices and market prices higher. Nothing is logical here that is taking place over the last few days, and it looks like something strange is happening. I mean, I would think grain should be higher based on cost and based on demand.
With the people that you speak to on a daily basis, what are their big concerns? What are you talking to them about mostly?
Well, I think that, listen, there's a short supply that's coming out. And again, we should have a big demand. I mean, you've got, all kinds of issues that are at play here, between, the cost of crude and cost of natural gas, which, has come off recently, but still higher. And, we've got a lot of expense that has to come in. And if we're going to have a short crop, which it looks like so far, that's going to be the case. And there's no salvation in Ukraine and Russia. We're not getting that wheat. I mean, to me, it looks like prices should be moving higher, and I think they will. I think it'll just be later than I thought.
What about inputs for spring of 23? Any chatter there?
They're expensive, and and again, I think you're gonna see in 23. I think you're gonna see a repeat, and if Australia and Brazil and Argentina don't have a good year next year again, you could have a problem, because I think you're gonna limit a lot of the smaller farmers from getting involved. They may choose not to plant next year with these costs. I mean, not only have their inputs gone up, but one of the biggest inputs we don't talk about is the bank and the financing the money, and those numbers have gone ballistic.
Yeah, I mean, that brings in the economy. What are your thoughts there?
I think we're in a lot of trouble, Scott. Since you watch these prices of crude oil, number one, and food, number two, we may not count them correctly when we do our CPI numbers, but every American knows that other than a major expense out of an emergency, your number one costs are food and energy. And that's where you spend most of your money to feed your family and take care of business. And if we have these prices continue to rising, which I believe they will, then how are we going to exist? How's the economy going to grow? And I've heard recently that there's also going to be a diesel fuel shortage. And I understand right now, and I don't know this for a fact, this is just rumor, but we only have a 25-day supply of diesel right now. Okay. So again, I don't know if that's fact, but if it's fact, it's going to be a big problem.
Well, I think, yeah, I mean, that obviously that would be a big problem. And you're right. If we don't see these input prices give us a little bit of a break, I mean, there could be a point where it's just too expensive to put it in the ground next year. All right, we're going to go away. We're going to take a quick break. We're going to come back and talk with Todd Horowitz with Bubba Trading after this. All right, welcome back to Market Day Report. I'm Scott Schulte. Let's jump in and take a look at live cattle prices. Live cattle in Chicago. That D's contract is up $1.50 to $153.92. Feb's up $1.17 to $156.70. We move over to the feeder cattle prices. What do they have? Feeder cattle, that's up 75 cents in November to $179.10. Chan's up $1.42 at $181.80. Lean hogs in Chicago. Lean hogs are down 90 cents in December, 88.22 last. February's down a nickel to 90.47. Let's bring back in Todd Horowitz, Bubba Trading in Chicago. Todd, thoughts on the cattle and hog complex?
I think they're going to stay and churn in these ranges, Scott. I think this will go back to, with the cost of living, and if oil prices are lower, we'll see a little bit more demand in cattle, and if oil prices are higher, we'll see a little bit more demand in hogs. I think we're in a nice little bit of a trading range. I don't see any downside, which is the good news. I don't think we're going to get cracked here. I think they're going to hold, and I think you're probably going to trade in probably a couple of buck range back and forth. And again, I think it'll depend. I don't think there's a lot of room to go up unless there's an emergency, but I don't think there's room to go down either. I think we're in a real stable, steady market that'll be good for everybody, because I think that, again, as we continue to grow, now again, obviously this will change if the economy continues to worsen and we get through this and we find out, oil's now back to 120, 130, and all these other problems that exist, and including the Federal Reserve. So, but right now, the way it looks, we're pretty static, and I think we're going to stay somewhere within a nice little trading range basis towards the upside.
We had PMIs out earlier today, and they weren't very good, were they?
No, they weren't, but it's interesting how the markets took off when they came out, which is, again, this is a strange look, but I think the biggest thing you have here, Scott, is a liquidity issue everywhere, and market liquidity across the board, and pick the product is missing. And that, to me, is a bigger problem, but it also allows some more things, some more shenanigans that can take place when you have a market that's lacking liquidity.
All right. Thank you very much. Todd Horowitz,
Thanks,
Bubba Trading, Chicago. We're in Nashville. I'll throw it back to Janet. Thanks.